Show you a way as to how you can earn 5.75% return on your investment. You can make $1,200 if you had $10,000, and if you're willing to invest and willing to not touch that money for next 2 years, which is 24 months. Yes, we'll be talking about certificates of deposit. I'll share how you can calculate your own return based on the interest rates. I will share why this is a guaranteed return, which is called CD, certificates of deposit. How does that work and what you can do, how you can take the advantage of the high interest rates. Interest rates have been skyrocketing for last 3 to 4 years. For the most part, it is hurting the real estate people who want to buy homes because your home mortgage, home equity line of credit, and home loans have skyrocketed and people cannot really afford. Just to put it into perspective, you had 3% rate of return or the interest rates per year for the home mortgage before 3 to 4 years. Right now, you have that 6.75%. On the other hand, your certificates of deposit have yield a ton of return, and you can take advantage if you have just $10,000 that you're not going to touch and you want to put it aside. You can earn $1,183.06. Take a look right here. Your earning on a monthly basis is going to be $46.70. For the most of the people, that could be your cable bill or your cell phone bill or monthly expenses that are recurring, so you can take the advantage of the best interest rates that you have. We will be talking about what are the best interest rates. At the end of the video, I'll be showing a pretty good insight as to what something called brokered CD. And you can earn, as an example right here, 5.40% return for next 2 years. If you think about what S&P does in general, and this is the latest and greatest data for last 2 years, take a look. S&P 500 2-year return as of May 2023 is negative 0.58%. S&P 500 2-year return is 0.58% negative compared to what they earned 0.28% negative last month. For the last year, S&P 500 earned 35.73%. This is lower than the long-term average of 14.43%. My point is, S&P has great return, but there is no guarantee that within next 2 years you're going to earn the return that you're looking for. Brokered CD that has a ton of benefit that I'll be sharing. I'll give you an example out of my own brokerage account. You can earn 5.40% return. I'll go on step by step and I'll be sharing this information. Before I go ahead, I just wanted to tell you, for those who don't really know what is certificate of deposits and what can it do for you. A certificate of deposit, known as CD, is a saving product that earns interest on a lump sum for a fixed period of time. CD differ from savings account because the money must remain untouched. So this is the key. You cannot really touch the money for the period of time that you are going to lock. But that will work in your benefit if you have some amount that you're putting into your savings account, you're not touching. If you want to buy a house in next 2 to 3 years, but you are sure that you're not going to buy a house for next couple of years or 3, you can take the advantage of certificate of deposit. You do have ability to touch the money, but you will need to pay the penalty or fee, or you lose the interest. CD usually have higher return rate than the saving accounts as an incentive for the lost liquidity. Pay higher interest rates than the best savings account and money market account in exchange for leaving the funds on the deposit for a fixed period of time. You can leave your money for 12 months, 18 months, 16 months, or whatever you want. In this particular example, and I'll link this calculator in this video in the description box. Do click the like button if you really like this content and subscribe to my channel for more video. Now, if you have at any given time, let's say you want to put this money for 36 months, which is 3 years. So you simply go ahead and change 36 right here, and you should be able to see that at the 5.75% interest rates, you're going to earn $1,826.09. Now, if you have more money, you can change your deposit amount right here. As an example, if you're willing to put $25,000 in the CD, you can earn $4,565.22. Your earning per month is going to be $116.75. This is what the benefit of certificate of deposit. Certificate of deposit are going to be the safest investment insured by FDIC. I will share a couple of more points what FDIC insurance means. But let's talk about why CD is more beneficial. CDs are a safer and more productive and conservative investment than stocks and bonds. They're offering lower opportunity for growth, but it is a non-volatile, guaranteed rate of return. Virtually every bank, credit union, brokerage firm, they all offer a menu of CD options. I have personally seen smaller the bank, higher the interest rates. You can think about bigger banks like Bank of America, Wachovia, JP Morgan Chase. They have lower interest rates than the credit union on certificates of deposit for majority of the time. Top nationally available CD rates are typically 5 to 8 times higher than the industry average for every term. So shopping around delivers significant gains. But don't worry, because I'm going to show you a way that how you don't really need to open an account and still you can enjoy the best rate offered by any financial institution. Although you lock into a term for a duration to open up a CD, their options for exiting early should encounter an emergency or change of plans. Now let's take a look. What are the best interest rates for July 2023? As you can see, on one of the sites that I'm looking into right now, you can earn up to 5.35% interest rates for July 2023. The top banks are Alliant Credit Union, Certificate of Deposit, the best CD rate. The interest rate is 5.00% APY for 1 year. For 1 year, when you think about APY, it is annual percentage yield. The second bank, as you see, is BMO Auto Certificate of Deposit. My point is, you will not have account with the best interest rates possible that you can get for your bank that you have an account in. So I'll show you how you can earn more interest, and you don't really need to open an account with something called brokered CD. You need to learn about what is FDIC. The FDIC is an independent agency created by the Congress to maintain stability and public confidence in nation's financial systems. What is the deposit insurance? Many of you may have questioned. FDIC deposit insurance protects bank customer in the event of FDIC insured depository institution fails. Basically, the deposits are insured up to at least $250,000 per depositor. Once again, $250,000 per depositor, per FDIC insured bank, and per ownership category. For example, if a customer had a CD in their name alone with a principal balance of $195,000 and $3,000 in accrued interest, the full amount of $198,000 will be insured by FDIC insurance. This is still within the $250,000 cap or maximum insurance that is offered by FDIC, so your money will be 100% insured. You can find out a couple of websites and you can see what is the best rates for CD for July 2023. On this particular bankrate.com, you can see that it is up to 5.52%. BMO, 5.10% for 1 year. Then you can see this CFG Community Bank. It has 5.52% for 1 year. You may or may not have an account with these financial institutions. So let's take a look at brokered CD. I'm using one of the brokerage website and brokerage system right here, something called Fidelity. You can have your own brokerage account and you can find out with the fixed income, bonds, and CD section, and you can figure out what is the best interest rates that are offered by these financial institutions. As you can see, Fidelity has multiple CDs where you can earn 5.25% for 3 months, 5.20% for 6 months right here. For 1 year, you can earn 5.45%. However, if you're not going to touch money, let's say for 2 or 3 years, you can earn up to 5.40 or 5.35%, which is a pretty high guaranteed interest rates. Now, if someone wants to put money, let's say $25,000 for 5.35% for 5 years, how can you figure out how much interest you will earn at the end of 5 years? In the link in the description below, you can find the CD calculator. You put $25,000 as the initial deposit into this box. You can also put here years, and you can change this into 5 years. And let's see, at 5.35% interest rates, how much money you can earn. So you will be earning $7,442.38 when your CD matures. This CD is going to be insured by FDIC because it's still lower than $250,000. With initial deposit of $25,000, that will be converted into $32,442.38. Now I'll give you a quick example as to how this looks like. You can click the buy button. If you have Fidelity, you can log in and you can find out the brokered CD. I'm going to take an example of a CD with the time period of 2 years, with the yield 5.40% as you see on my screen, and the maturity date of 7/7/2025. The minimum investment is $1,000. The QSIP is right here, whether the CD is insured by FDIC or not. Your broker will tell you, as you can see, it is insured by FDIC. You also have the FDIC certificate number. Your minimum investment right here that says $1,000. Incremental investment, which means the minimum is $1,000, then you will have to invest $2,000, $3,000, $4,000 because the incremental investment is $1,000. Is there a survivor option? Yes, as you can see, you have the CD issue date, you have the dated, so today's date, you have the first interest payment when it will be eligible, and then you have maturity date as you can see on my screen. The coupon details are very important. Take a look right here. These are the coupon details. 5.40% is the coupon. The coupon type is fixed, which means you cannot really touch the money. The current rate effective date is starting 6/27/2023. The day count basis is right here, 365-day ACT. The foreign information, is there any foreign or international? It's not eligible, so it's no and no. So this is how you can find the brokered CD. You can do it on Fidelity, on Vanguard, TD Ameritrade, or whatever the brokerage account that you may have. The key takeaway here is brokered CD is a CD that investor purchases through a brokerage firm or a sales representative rather than directly from the bank. So you don't really need to go out to a bank. You can just do everything online on your computer screen. So it is very comfortable, very easy, and very convenient. A bank still initiates a broker CD but outsources to sell to the firm that are trying to find potential investors. In this case, this CD was the Wells Fargo CD, as you can see. So Wells Fargo Bank, National Association with 5.4% for 2 years, they want Fidelity to sell this CD, find out the potential customers, and have that filled out. A bank still initiates the broker CD, but it outsources. Brokered CD typically yields more than regular CDs because they are in more competitive market. Brokered CDs generally offer more flexibility than the traditional CDs, and flexibility of broker CD can make it easier for investors. With that, I really quickly wanted to touch upon a couple of advantages and disadvantages. The advantage of broker CD provides you high interest rates. Longer term to lock in high rates as well. As in our example, you saw that you can do the same interest rate for 3, 4, 5 years. Allows you to skip early withdrawal penalty. Better liquidity since they trade this CDs into the secondary market. In other words, you don't really need to open up an account on a given bank. You can just have a brokerage account and you can buy pretty much any CD that you want that is offered by your broker. Ability to keep multiple CDs from different banks in your brokerage account. However, there are some disadvantages of the brokered CD. If the CD is callable, you could lose your high interest rates along with the future interest that you can earn. So I want you to verify with your brokerage if you have any doubts. Your brokered CD could be uninsured if the original issue bank or credit union is not FDIC insured. So that's why it's very important to check this box whether FDIC insured is yes or no. Third thing is, if you do need to sell your brokered CD in the secondary market, you may have to sell it for less than what it was originally worth. And the last point is, since deposit brokers aren't approved by a federal agency, you could be purchasing a brokered CD from an unreputable source if you don't do a background check. However, when you're using your brokerage account like Fidelity, Vanguard, TD Ameritrade, or any other brokerage account, let's say if you have with Wells Fargo or Bank of America, that is out of the question. I hope you like this information. If you did, hit the like button, subscribe to the channel. I will see you in the next video. Happy investing, and let me know in the comment section whether you like this video or not.